Yeah, I mean, so JP Morgan thinks this is the next big thing. As in the past, the story of the past 10 to 15 years has basically been companies have been enabled to stay private for longer and longer. What happens is they get really big, they get huge. SpaceX is worth more than 30 billion. And what happens is the concern is that when some of these companies go public, all of the juice has already been squeezed and for private VC investors. And in this case, hedge funds, institutional investors, wealth offices have approached JP Morgan and they've said, look, can we get into some of these pre-IPO stock before they go IPO? We want some of that action as well.
So this sounds like it's almost a new asset class in the sense that people, especially if you've got pension funds, hedge funds, and those kinds of institutional investors who, especially the pension funds, need a higher return, probably think if they can get in sooner, that's one way of generating those returns. I guess JP Morgan, it's now up to them to prove that that'll be true in the long run.
Right. I mean, this is anybody's guess as to how true that is. I mean, I would agree with you, Kelly, that this is maybe not new, but a burgeoning asset class in the sense that there isn't as much liquidity for this as if you were to trade Google or Microsoft, obviously. I mean, these are contracts. These are legal contracts. They take weeks to settle, and they're complicated, sort of very bespoke, very voice-traded things. So when you have something that's like that, it's basically been dominated by a few West Coast boutique investment banks that most people haven't heard of. And this is finally the time when a big Wall Street firm like JP Morgan has decided to plow into this and perhaps make more liquidity in this market and perhaps make it much more of a mainstream thing.
Right, which ironically would undermine its potential returns. The more capital that comes in and the more price discovery there is and the more participants to make a market, you would think the more rational that pricing might be and maybe not capturing as many of the gains that we've seen in the private market where that transition to going public, companies often see 40-50% of their value go up in smoke.
Yeah, I mean, certainly that's possible, right? This is a game constantly of pushing out the horizon and then others rushing in to try to get in earlier. And, as you say, the gains could evaporate, right? But I think there's probably a time, a period of a few years where this could be something that actually has a competitive advantage. And, the quote from the JP Morgan executive managing director I spoke to was basically the higher the NASDAQ goes, the more interest there is in this asset class.
And so the higher the NASDAQ goes, the less people want to participate in it, basically.
Precisely, Kelly.
Okay, they want to get in on it 10 years ago. Hugh, thank you very much.